Hello, today we are solving May 2025 Unit 2 question number 1 part F. Evaluate the project from the point of view of Metropolis Traffic PLC. So this Metropolis Traffic PLC will be making an investment, okay, and it is seeming to the Metropolis Traffic company is going to invest in a project through two finance options. So option A and option B. In the part A of the question, we had to calculate the weighted average cost for the option B, and from that we had to find which was the appropriate option to calculate for the finance. So, and it was concluded option B was the best funding method because WACC was lower for this project. Then subsequently they asked what is the average rate of return of the project. We had calculated the average rate of return for the project to be around 17.2%. Okay, that was the part D of the question. Then we had to calculate the NPV. Okay, we had to calculate the NPV also. It was around this much value for the end of 5 years. Then we were asked to calculate the profitability index for the project. Average rate of return for the project was around 17.2%, and then we had to calculate profitability index for the project. So based on this, now they are asking us to evaluate if the project is good for Metropolis Traffic PLC. Is it worthwhile investing in this project? So what are the points for the investment? Okay, when you are doing an investment for a project, is it worthwhile? We are calculating certain values. We had calculated NPV. Okay, first one was NPV, which we had calculated. So the NPV of the project was positive. So it has to be positive. Then this means that it will have a positive return from the investment at the end of 5 years. Then we had to calculate the accounting rate of return. Okay, EARR. So accounting rate of return looks good at 17.2%, and it is better than the interest rate of the bank which you are paying, okay, at the rate of 11%. So it seems to be good. Then profitability index, okay, PI. So the profitability index, okay, was also positive, and it was greater than 1. So 1.41, which is greater than 1, the business will not lose money after 5 years if it invests. That is what it means. If it is a positive value, you will not lose the money. If it was less than 1, you might lose the money. Then the simple payback period. Okay, next one was the payback period. So the payback period you can calculate. We were not asked to calculate. You can say that the payback period was using the simple formula, that initial investment over the net cash flow happening. So it is around 2.688 years, or 2 years and 8 months approximately. So it takes, okay, approximately to pay back 2 years and 8 months. Then you can conclude by saying that the project is going to be there for 5 years. It is unlikely you will stop this project. So which means that Metropolis Traffic will win the contract. They will be in a position to extend the contract even after 5 years. Then if it will successfully operate, then they will be in a good position to win more contract in the other cities and towns, and this seems to be a worthwhile investment, okay, for the project. So against the investment, okay, what is the against the investment in this project? Okay, what are the points against the investment for the project? So we can see that the city council is taking around 50% of the revenue of the scheme. So here license fee, okay, they are talking about the license fee which they are asking 50%. This is a cost, okay, annual cost, and it is almost, okay, it is the city license, the city council are taking 50% of the revenue of the scheme as license, okay, it is taking as a license fee. annually. So this is a huge amount. Okay, this happens to be a very high, and you can negotiate to make it lower, or you can accept it. But these companies, okay, could bid for the project and possibly win the contract. There is a and all other things which we are seeing. Okay, so that is one. So you have to negotiate. Is it possible to negotiate lower, or are the other companies who are happy to accept this 50%? What are the competing companies we have to conclude, or will they be even able to win this project? Then the second question is, we can see that everything seems to be a forecast. So forecast of cost, forecast of the profit, okay, forecast of the revenue of the project. This is a forecast, which means it's an estimation that's happening. So if it's an estimation, it doesn't indicate the actual figures, and it could be much lower or higher. In those cases, your investment of actual returns might not happen, or it might be very less. So but overall you can say it is favorable to undertake the project Metropolis for the Metropolis Traffic PLC, as most of the investment return figures we had calculated were positive and seemed to be favorable. This is how you can give a conclusion. You can give a conclusion either way. You can also conclude that you don't want to invest, okay, in this project because there are so many estimations here. Okay, you can just give a conclusion of your choice, but you have to give one